Oil was 101. The Friday before, the Dow was just above 11,000. Seems like it was yesterday, doesn't it?
Absolutely. And in fact, some of the worst part of the crisis came after that. The commercial paper market freezing up, people preparing to take trillions of dollars out of money market funds till the Fed had to rush in and say, wait, keep your money in there, we'll guarantee them. At the same time, the Fed forgetting that the FDIC was only guaranteeing $100,000 or $150,000 in the banks. So then we saw money run out of the banks. It's just been an incredible period.
So, I mean, too often when we talk, it's about short-term dynamics, but are you of the mind that we have fixed or tried to fix the problem by compounding it with more problems, or that net-net we are ahead of where we were a year ago?
Well, we're ahead of where we were, let's say, going into March, because things continued to worsen. We had a change in administration. People didn't know if it was going to be a change in policy. I think that we remain, unfortunately, rather vulnerable here. You know, they fill the patient with so much medication to stop the hemorrhaging. The hemorrhaging looks like it's stopped. But now we've got to kind of unwind all that medication the patient's on without doing any more damage, and that's going to be tough.
And that could come in a explosive way, or it can come, as Rubini told us yesterday, through a death of 1,000 cuts. Do you have any sense which it'll be?
I always worry about a geopolitical surprise. We could get one of those. You could get another round of bank failures in Eastern Europe or somewhere else. And if you look, the reports out today are that bank credit continues to drop at a precipitous rate, maybe as bad as it did during the early part of the Depression. So we're not out of the woods by any means. And I think every morning Bernanke gets up and turns on the TV and starts to read his newspapers and wonder what surprise is coming next.
Well, he's got several more years of doing just that, it looks like.
And I think he's going to get a much grayer beard as things go on.
You know, Art, some of these some of the stocks that you'd call quality are starting to move. I know you've seen that probably. Just wondering whether, you know, and again, we got another one of these little things that turn the futures around. Today was retail sales, FedEx last week. All these little things keep happening that seem to be building some support for where the market has gone.
Well, you know, if you're panning for gold, you can always find a little nugget somewhere, Joe. But I will tell you this. I've been doing this nearly 50 years, okay? And I find that there are times to be cautious. The market can move ahead. I mean, last year you used to tease me. You wanted me to buy into the...
You don't have to buy into it or capitulate. But, right. I mean, since July, we're up a lot.
There's no question about it. And I certainly missed that. But as Rick pointed out, NASDAQ nearly doubled between the irrational exuberance and when they finally topped out in a matter of months.
Just seems like the market's level and fundamentals seem like they're never related. I mean, you look at when we were at 14,000, that was crazy. You look at 6,000, that was crazy. It's just hard to look at the current, you know, fundamentals and try to determine where the market should be.
Well, you can try to do some fair value pricing. They can go a little bit further, but for now they're overvalued and overbought.
Art, we'll talk to you tomorrow or the day after, or hopefully.
Hopefully. All right.
Art Cashin.